Hey guys, Mike with Mortgage Nerds here in Appleton, and I am with...
Brian Hoffman with Mortgage Nerds in Appleton.
Yes, and it's that special time of year again, right around Christmas. What else happens around this time, Brian?
Oh, it is tax season.
It is property tax season specifically. So I bought a home, I escrow, and I got a tax bill in the mail. It says I owe $7,000. What's that about?
Nice house. What it says with that tax bill. So you're always going to get the tax bill.
Yep.
Okay. Now your servicer, if you chose to escrow for your taxes, like you said you did.
Servicer, the person that you send payments to.
Correct.
Yep.
They will pay your taxes depending on how you chose to have them paid, right? You can actually have, if you chose to have the check sent to you, it will get sent to you. But if you chose to have that servicer pay those taxes for you, they will send that to the township, county, whatever it is, to have those paid.
Yep.
You're always going to get the bill. Always.
Which is good, right?
Yep.
And I'd look at the bill, and what else does it show on there? It shows your assessed value, right?
Right.
If your taxes went up, down, that kind of stuff.
Absolutely.
And you can look at all that stuff.
Yeah.
But you know the exact amount that needs to be paid,
Yeah.
right? Your servicer, the person you make payments to, will make that payment for you. And then when they make that payment, how do they know? How do you know if their property taxes are paid?
A couple different things that you can look at. One, you can go on the county website. Not a lot of people know how to navigate through that.
Each county is a little bit unique.
It is a little bit different. So otherwise, when your mortgage statement for, let's say they were paid in December, for January comes available, you're going to actually see that escrow disbursement where it shows that tax amount left out. If you chose to have them paid in January, you'll see it on your February statement.
Let's talk about that. So we're in Wisconsin. Let's specify that because every state's different. Our property taxes are technically not due until January 31st.
Correct.
However, most people elect to have them paid
By December 31st,
so
the previous year. That tax implications, things like
So
that, on your income taxes.
yeah, so you can write them off on your income taxes. So
A lot of different factors with that. We're
Right.
not accountants because depending on your situation, you might not even write your taxes off.
or it may make sense to actually deduct them both in 1 year, 2
Yeah.
years and 1 year. Contact an accountant. If you don't have one, we got a great one. So that's how that's paid. So that's they're escrowed. They will be taken care of.
They
right?
are paid.
They are not proactively sent a receipt or any of that kind of stuff. You need to go online or look on your bill.
Yep,
right?
correct.
Make sure it's done. Now, taxes were $7,000. They only escrowed for $6,927.
Great question. That's where I was going next.
All right.
So yeah, with that, your servicer will still pay that full bill. However, they're going to come to you and
The
say,
total
hey,
of $7,000.
Right.
Yep.
They're going to come to you and say, how do you want to make up that difference? Do you want to pay that in full?
Yep.
Do you want to raise your tax escrow amount enough to meet where it's projected next year, along with paying what was just paid for you?
Yep.
So you can choose those different options to happen.
Yep.
It really comes down to you and what makes most sense for you.
But you will have to pay it back. I mean,
Without a doubt.
One way or another, they'll raise your payment and get
Yep.
the money back. So they're just going to reallocate it in some way. They do give you the options. And sometimes it does go the other way. So you will have a surplus sometimes of money is in there, and then let's cut you a check back.
Right. And then there's another instance to where you could have been reassessed after the purchase and it goes up quite a bit.
Yeah.
Why is it so short? Well, your lender goes off of and title company and whoever's holding the escrow. They go off that previous year's tax bill. So you just don't know what that future tax implication is going to be.
Taxes do go up is the whole point.
Or down.
Yep, or down. But so when they do go up, it's not, nobody's trying to deceive anybody. But let's say that when they sold the house, it was appraised at it was assessed at $200,000. Big difference there. Assessed at $200,000. You bought it for $250,000. That township may actually automatically use that purchase price as the new assessed value. Not everybody does that, but if they do,
Right.
taxes would go up
Right.
in that case.
So everything's looked at from the past with taxes, not to the future, and it's impossible to know where that's actually going to go.
Yep, or when they do it.
Yeah.
I've seen where that purchase happens 2 years later, they finally assess
Sure.
it. So it's different for everybody. Any other big points that they should touch on?
I think that's it.
I think there's one more.
Okay.
We are your resource. If you have questions or unique situations, whether you're currently a client of ours or not, or a friend or family of somebody, anybody that just has a question about your tax escrows, we would be happy to advise them, right?
sure.
That's what we're here for.
Yep.
And yeah, hopefully you guys found this information informative. Remember, mortgages are complex.
Let Mortgage Nerds give you the answers you need.
See you guys.